Good day, everyone, and welcome to today's webinar, where I will be presenting you a system that is based on a couple of moving averages, a channel, and a MACD. So this system is exclusive to all participants of Forex Street Premium webinars. I created the system back in 2015, and it's supposed to give you some nice trades over the day, but you definitely need to know how you can actually use the system. The biggest advantage of the system is that it uses some indicators that are basically tested, like regression indicator, moving averages, MACD, so ATR, of course, and there are a lot of philosophy with indicators. I haven't made it like other people, I mean, some custom indicators. You know, guys, when people put some fancy names in their indicators, usually it's everything. It's always proven indicators that are by default on MT4 or some modified indicators that exist in the market. But you cannot name an indicator like something like giving a fancy name to it, right? You know what I mean? And making money on it. I mean, it's not very ethical. So most of the indicators that can be found on the internet are usually derived from well-known and the existing indicators, but also there are some coders who can make the indicators much more efficient from their original counterparts. And I always support the fact that there are a lot of good coders out there on the internet, especially on TDI forums, also on Forex Factory, and those people are really a great community and contribution to all Forex market. But just making an indicator and giving it a fancy name of some special, something special, it's not okay. Because most of the indicators they only serve you as cues for a possible entry, exit, or placing a stop loss. Because guys, when you trade systems, when you trade different systems, you always need to have that human psychology in your decisions. That's why ultimately when you see a signal, it is you who actually need to decide whether to enter the market or not. We cannot just follow the system automatically and trade every single signal. It's not okay, and in the long run, it won't make us any money. What we actually are trying to do is to see if the signal is actually valid, and we use our own logic as a Forex trader, and then we actually decide to enter the market or not. If we would only take every signal, it definitely would put us in a position where we would fight for our account to stay alive. I have experienced a lot of different things during my career, and I know that overtrading and taking every signal possible can only give you a headache. So that is why I'm telling you, whenever you see a signal from any system, use your own logic to see if the system is really valid. You need to use the logic based on, everything is experience. If you see that the price is really going strongly to the upside, and then you see some reversal, and again, you know that there is uptrend, well, you can take the signal. But do not take signals that happen close to resistance. You cannot buy, guys, close to resistance. You cannot sell close to support. In extreme circumstances, you can do that only if there is a strong trend, but not when you see that the trend is not that strong. Usually during intraday trading, most of the time, the trend will not be that strong to buy at resistance or sell at support. Maybe once in a while you will see that. Let's say maybe once in 2 weeks you can notice some things that are out of extremes, but usually we need to follow ATR indicator that calculates for this system, let's say it calculates past 14 days of price action and it plots it on the chart. So you really need to decide as a trader whether the system is giving you a good signal or is just a signal. You know, you cannot take any signal, every single signal. So before I delve deeper into the system itself, I will explain the indicators that I use in this system, and I will tell you that you don't need to worry about regression indicator, because if you read a lot of different opinions on a regression indicator, some people call it, I mean, this is a fancy name, center of gravity. I mean, guys, center of gravity is just an indicator based on regression channel. Why use such a fancy name? So this is regression channel, okay, a simple regression channel. And I don't use those kind of names, center of gravity, gravity indicators. You know, we can always think about it when we trade a price. We can always think about what is behind the indicator. What is the calculation behind the indicator? I remember there was also some moving averages back in 2010, and some people call it destiny line. Imagine a name, a destiny line. I mean, there is no destiny line. That is just a moving average. So I really tend to stick to the original names, and of course, I will explain you now about regression indicator, what you need to know. Regression indicator is a channel. Actually, it's just a simple channel, but because it's adaptive, it's called adaptive channel. It adapts to price. In the past, it will adapt. So when you watch this when you look at this in now moment, it looks almost ideal. But here, if you go to indicators list and to regression channel, and when you enter historical shift, you will see that it's a little bit different in the past. It's not repainting in a full sense or in a literal sense. It's just adaptation to price action in the past. So the channel tries to adapt to price movement in the past. So this is how it looks when we place a historical shift of 120. You see, it's still pretty much close to now moment price action. Okay, you see here, it's pretty much close, okay, to now moment price action. We can mark actually channel lines like this. So you can always, guys, you can always test how it works in the past when you go to historical setting. But this is the optimal calculation for this system. 2 polynomial degree, standard deviations to 1.3. 500 bars in video, and this is just for back testing, guys. So if you want to do a manual back test, you can place historical shift. This is when you place 0, it will move to now moment. So see here, guys, it's not a big deviation. You see, it's just a couple of pips. So you see, it's not repainting, it's actually adaptive channel. It adapts to the past, but if you compare it to now moment, you will see that historically the deviation is not that high. Okay, so the channel works good with this system. Now also when you go to regression channel, you should leave it as it is. If you place standard deviations at 1 by default, the channel will look more narrow. It will be a narrow channel. If you put it higher than this, let's say 2 or 3, we can use 2, let's say, the channel will spread, you see? So I don't like it personally because it tends to be a bit wide, in my opinion, for intraday methods. So I tend to leave it at 1.3. You don't mess with bar shift. It simply has no function with this system. Next indicator that I put here is moving average. This black moving average is 8-period exponential. You can check it here. Let's see if it is the first. Yes. So exponential moving average, and it actually gives you a current momentum of the price. When you place an exponential moving average that is set on 8, it will calculate the momentum, and it will actually plot an angle that you can estimate momentum with. The angle of the moving average is the actual momentum, and I will explain why it is good to be in this system. Don't worry, this is not a crossover system. I don't like particularly crossover systems. It just followed the rules of basic price action that says buy at support, sell at resistance. Okay, so it's pretty much clear. This moving average is okay. This is you see here. I will open it. It's 50 exponential moving average, and this moving average is actually giving you now moment trend, but it's now moment trend that it's still higher than an interim trend. You need to define between those two things. Now moment trend and interim trend should be plotted together in order to see the overall trend in the market. Because we are doing this on 1 hour time frame, we are not trading higher time frames nor lower time frames. We need to find the optimum balance between moving averages for this system. So I have concluded that 50 exponential and 20 and 144 are actually enough for this system. For MACD, we will use 10, 20, 1, 7. Now you will ask why 10, 20, 1, 7, because when this MACD was presented originally, it was already optimized for some intraday movements. And when I tested the system, I simply changed nothing for this indicator. I left it as default, and definitely it serves well. So you have 10, 20, signal EMA set to 1, and moving average of signal is 7. So you should leave it as default. MACD is a lagging indicator, and MACD actually for this system is used to confirm let's say a longer trend. So when you have a now moment trend, an interim trend, and longer time frame trend, you can actually try to trade multiple time frames on a single time frame. So that is why we have a momentum line, trend, medium trend, or now moment trend, and finally MACD that serves as a longer trend for this system. Also, ATR and regression channel will give us extremes where we will be placing our trades. You don't need to think twice about this system because it's very, very clear. Now we can actually do swing trades. Those are two possibilities with this system. We can do swing trades and we can also do intraday trades. If you want to do swing trades, then you need to follow, basically you would need to follow not just ATR, but the overall position of this regression channel indicator. Now, I would advise, if you trade with, of course, Admiral Markets, I would advise you to have this indicator that is very, very useful for this system, and it's called Admiral Pivot. Now, guys, you see, this pivot point has a host of different time frames in its calculation. It can plot on current chart, it can plot 1 minute, 5 minute, 15, 30 minute pivots and so on. But in order to do swing trades, guys, you need to place it on weekly, okay? So not on daily, because usually when we plot 1 hour, we plot it with daily pivot points. For this, we need to plot it on weekly points. And here, guys, you see, this is weekly pivot points. So if you want to swing trade, you need to have weekly pivot points. For intraday trades, you definitely need to leave it as it is, and you go with ATR pivots. ATR indicator is the indicator that originally predicts the range of the price for any given pair based on previous day's calculation. The optimal number for day trading for me is ATR of 14. So you need to leave it as it is, ATR 14, and it will plot you these levels. Have in mind that dotted lines are actually projection low and projection high. But also have in mind, if the price breaks projection high and or projection low, this yellow line will actually go below or above the original projection line. It can appear usually when trend is so strong that ATR is overshot. What does it mean when I say overshot? It means that when the price breaks through or below the projection line, these dotted lines, it means we say that ATR is overshot. So it means that this yellow projection line, projection pivot point, will go lower because that will be the current price in now moment. So I really cannot trade without ATR indicator. If you follow my analysis, that is done by Camarilla MACD method, you will notice, guys, that I always have ATR indicator. It's very important in intraday trading. It's extremely important. I just don't know why people don't use. Well, everyone has their own rights to use whatever they think it works. But you know, guys, if you want to be precise with predicting or analyzing price action, intraday movements, you need to have something that is proven. Average true range or the ATR indicator is proven. It's very good. For me, it's a must. So I have also included the ADR projections in this system. So what are the rules for taking the trades? Okay, we have different rules, guys. First of all, you need to know that you can go simply with the trend, or you can actually try to counter trend and trend. So you can actually find out what works best for you. You can do counter trend trade opportunities, you can do trend trading opportunities. I stick to trend, but I can say that if you can also try to trade counter trend if you let's say, if you have the correct psychology for that. For some people who are novice traders, I know it's very hard to go with counter trend trades, but for people who actually have experience in forex market or trading generally, they can try to trade both ways. For me, I'm mostly an intraday trader, but I can also say that from time to time I can go with counter trend trades simply because I think that traders can benefit from also taking retracements and reversals, especially if those reversals hit extreme levels such as top of the ATR or the channel tops or previous levels of support and resistance. So everything can be a good confluence for a nice counter trend trade. But of course, it has to be extreme because you cannot hope for a good counter trend trade and just short it if you see a resistance. Simply resistance is not enough. That resistance or support should be at its extremes. It's also, guys, when you're trading with a trend, you need to buy when the price is low and you need to sell when price is high. Other words, you need to buy in uptrend, you need to buy when price is oversold, and in downtrend you need to sell when price is overbought. That is the primary logic of trading. Guys, listen to me, this is truth in forex trading. Forget about different signals, about following a simple system and taking every single opportunity. If this system tells me to go long here, I wouldn't go long here. I don't care really if the price went strongly to the upside. Okay, I will miss the trade. But my logic is telling me that I will go long here, not here. So I don't care for every signal. I, as a trader, always think twice before entering a trade. I will always look at the price and see where the price is in our moment to actually take the trade. So that is why a system just helps you to identify good entries. You cannot simply go with every signal. I explained to you at the beginning. So you need to follow the price carefully and assess every signal as a trader. For long trades, guys, we need to have price very close to the channel bottom. That is the first rule. So the price needs to be very close to the channel bottom, and blue moving average 50 needs to be above 144 moving average. Okay, so it doesn't matter if the touch of the bottom channel line happens before we see a trend. So where would I take the opportunity, guys? Definitely, I would look for the touch. It happened here, okay? And then I would see when I see a moving average align. Now, the problem is, guys, that very often, this is the problem with moving averages. You see here, it will happen usually that moving averages are not crossed, and they cross when price has made already a big movement here. Would we take a signal here? No, guys, we don't take a signal there. That is why we follow this black momentum moving average. It will give us the cue when the price will actually start an uptrend movement in conjunction with MACD. So let's find an example for a long trade. Definitely for this, we don't have moving averages aligned, but we have black moving average, that is momentum line. Now, when you see that black momentum moving average is crossing, just crossing both of these moving averages to the upside, and MACD is green, you take your long trade. So I would say that the entry is at this point or next candle. So the entry was there. You see, if you don't have moving averages aligned, it doesn't matter. You have a black moving average that can give you the entry. Now, this is just a confirmation that a trend is still strong to the upside. Okay? And if the price gets close, you can also find a good possibility to go long. So this is trend entry. Let's see another trend entry. Okay, here, guys, you see moving averages are aligned. So when you see that moving averages are aligned, okay, blue, your entry is, the price needs to touch at least the bottom line of the channel. But if it goes lower, it doesn't matter, even better for us. Because we still have trend, and here, guys, your entry is this. So when moving averages are aligned, you don't watch this black moving averages, black moving average. Black moving averages is only used in these kind of examples. When you see that moving averages are aligned in an opposite way. So in order for you to buy, blue needs to be above red. Here at the bottom of the channel, but because red is above blue, you wait for black moving average to cross both of these moving average and for MACD to be green. That is your signal. Here, your signal is simply the change from red to green color. So this is your buy signal here. See, this is your buy signal, and you see what happened afterwards. Another good signal. You see, guys, always it's best to trade when you don't see a big difference between your entry and stop loss. So this candle close here, stop loss is only 50 pips. It's good because your projection is higher. Let's say at least you should go with 1-to-1 ratio, or you can protect your trade by taking a half of your trade when price gets to middle moving average line. So what I usually do if I take the trade, if I do the trade here, I would exit half of my position there and put my stop loss to break even. So I don't have anything to lose. Another example here, guys. You see the price went up. Okay, it went down. Blue, okay, a lot of good entries. Let's see. In the past, do we have another? Yes, here, another entry. But you see, guys, here, it's not that good to enter the market because your stop would be very, very big. Let's see dollar yen, for example. Obviously, this is a downtrend. You can also watch for the slope of a regression channel that can pinpoint for a trend. So here, guys, you can see that the regression channel is really heavily aligned to the downside. So this could be your entry here. Price very close to the top. Let's see what it was in the now moment. Okay, accidentally I put a sell limit. I will delete it now. Okay, sell limit, we will delete it. So we go to indicators list, regression, and we will put, let's say, 120 historical shift to see where they were at now moment. Okay, here, you see, it was a bit close in that moment, a bit close. But you see, they were aligned like this. See? But again, when you compare it to just a couple of bars later, let's say 80, we will put 80, you will see that it was actually good to take a possible short. You see, it touched the medium line, it was red above blue, okay, and your entry was here. See, so your entry was there. So when you take the trade, best trades are always at the top of the channel. Next good trade is at the channel, at the medium channel, but you cannot short it here. So we saw that in now moment, the price was actually very close to the bottom channel. We don't short it there, no matter what signal is telling us. So here, in now moment, we saw that the price is very, very close to the support. So we don't take any trades here. Although we would have been profitable if we shorted it here. Guys, it's too low, in my opinion. So the price needs to be at least close to the top of ATR, close to the resistance of pivot point, or close to the channel top. That is what I call confluence with this system. So always watch to see if there is a confluence of extreme pivot point, extreme ATR pivot, resistance of pivot point, and the middle or higher channel line. So those are the zones where you can take your trades. If you see a trade that is giving you a trade opportunity that it signals you to short at support, if you see that it's really support, or when, because you see the price was really dropping from here. So probably this was very, very low. Even on ATR for that day, probably it was big support. I wouldn't short at support, no matter what. So let's use now moment price action. Here. Where would we take a trade on this pair? Because it's all obviously short. Well, I would go short if the price goes here, somewhere around this region. Okay? I would then wait for a short entry. Short entry would be signalized because if the price goes there, then MACD will be green, definitely. But we will be at extremes. because it's very close to pivot point. This channel line will go there, and red will still be above blue, possibly. If not, I would go with the black MA, and we will be at extremes of ATR pivot points. So that is how you can also predict where to short the price. So if this gets here, I would wait for a signal to give me a short trade opportunity for green MACD to become red. So we want to see a green cross to red, from green to red, like this. And that would be a signal to go short. If we don't see that moving averages are aligned like this, red above blue, then you would go with if blue goes above red, then you need to wait for black MACD to cross both of those moving averages to give you a signal. Okay, so that is how I explain it here. For example, let's use this example. Okay, this one. I would go short here. Let's say this was extreme, just for showcase. This was extreme. So when this black moving average crossed the extreme, I would go short. So this would be my short entry here. My stop loss would be 5 pips above the line, and I would go with ATR pivots, or if I swing the trade, I would go with Admiral weekly pivots or the bottom line, if there is a bottom line there. So if this is clear, guys, then I will move on to trade management. I will show you how to manage a trade once you are in profit. So I think the rules are very clear. I mean, it's pretty much obvious that you need to sell at extremes and buy at extremes too. You go with a trend, but as I say, you can go counter the trend. If you see that price is really breaking this upper channel line or bottom channel line, or if the price hits or overshots ATR, it means that it is at extremes, and you can try to go with counter trend opportunity. So for trade management, let's say that you trade a normal trade that is within your risk boundaries. At least you can go with 0.1 lot, right? So if you see that the price is there, you take a trade, and let's say you're in profit. When the price gets close to the middle line, or very close to ATR pivot, or very close to next support, whichever hits first, I would take the half of my trade and put the rest to break even. That is how you can manage your positions. Take the half, it's called scaling out. Take the half out and then ride a free ride. Scaling out is always a good thing to do if you are not sure whether you will take the whole trade or put everything to break even. It's always good to have a middle line. It's called scaling out. Take the half of your position, put the rest to break even, and ride a free ride. Additional trade management says that, let's say that you also took 0.1 lots. So if you go short from this region, okay, you can decide to close 90% of your trade, let's say close to support line, or you can close 70-80% here, and if the price overshots or goes below this support, you just move your stop loss 3 pips above support, because that support is resistance if the price goes below it. And you again ride a free ride. Then another trade management tip. Let's see that there is a strong momentum to the downside, and price simply goes through this support as a butter through knife, as a knife through butter. Then you move all your trade here. You just move your stop loss here, 3 pips above the line, not scaling out. You just move the whole of your trade couple of pips above this line, and you're actually again riding a free ride, securing the profits. You know, it's pretty much easy to manage trades like this. You just need to figure it out. Some people like to scale out. Some people like to take everything out. Some people like to actually put their stop loss to break even once they're in profit. So you do your own trade management. So it's very important to know that profit targets are either pivot points by ATR, weekly pivot points by other markets, or the extremes of the channel lines. So let's say that we took a short trade here. We got a signal. I would probably ride it because there is strong momentum to the downside on dollar yen now. I would probably ride it all the way down to support. And if I see that it's broken, I would place my stop loss here. You need to use the logic. That is why I'm saying you as a trader need to know about price action and apply logic to every single system you trade. If you like the system, you can email me. Of course, I will send you the indicators, but I advise you to download Almer Markets and trade, of course, with Almer Markets, because then you will have all these great tools, including correlation matrix and all useful stuff that comes with MT4 Supreme Edition. So I don't see any questions. I assume that everything is clear. Of course, guys, if you still have some questions regarding the system, you can email me and I will reply to you. I hope that you will make profits with the system. It's pretty much clear. It follows simple postulates of price action to buy low and sell high. And even if you trade with a trend only, it will give you good trend trading opportunities. Okay, guys, so I wish you a great day. I don't see any questions. I assume that everything is clear. So I wish you a great day, and just send me an email if you want me to send you all the indicators and a template. Cheers, guys, and trade safe. Talk to you soon.